What if you could wake up every month to $3,000 without working? Just imagine looking at your bank account on the first of the month and seeing $3,000 deposited, and you didn't have to trade a single hour of your life for it. That is $36,000 a year in pure passive income. Today, I am going to show you the exact amount of money you need to invest using a specialized SCHD retirement calculator approach, and why most people get the math completely wrong. By the end of this video, you are going to understand the exact investment needed to hit that goal, the realistic dividend yield assumptions you should be using, and a clear timeline based on your current income level. We are going to break down the numbers so clearly that you'll have a roadmap for your own financial independence. And no, you don't need to be a multimillionaire overnight to make this work. We are going to focus on a strategy that is accessible, repeatable, and mathematically sound. First, we need to talk about the vehicle we are using, SCHD. This stands for the Schwab U.S. Dividend Equity ETF. In the world of dividend investing, SCHD is often considered the gold standard. But what is it exactly? It is an exchange-traded fund that tracks the Dow Jones U.S. Dividend 100 Index. It doesn't just pick any company that pays a dividend. It looks for high-quality U.S. companies with a history of consistent payments and strong fundamental strength. We are talking about companies with high return on equity, strong cash flow to debt ratios, and a track record of growing those dividends over time. Think of SCHD as a machine that pays you regularly. Instead of you working for money, you are buying pieces of 100 different profitable businesses that work for you. It is designed to provide both capital appreciation, meaning the stock price goes up, and a steady stream of income that grows faster than inflation. So let's get to the core question that brought you here. How much money do you actually need to have invested in SCHD to earn $3,000 every single month? To many, that sounds like an impossible mountain to climb, but once we break down the math, it becomes a simple target. The answer to this question depends entirely on one specific number, and that is the dividend yield. The dividend yield is a simple metric. It is the yearly income divided by your total investment. If you have $100 invested and it pays you $3 a year, your yield is 3%. For SCHD, the yield typically fluctuates between 3% and 4% depending on the market price. This number is the heartbeat of your passive income strategy. Why does it matter so much? Because a higher yield means you need less total money invested to hit your goal. But you have to be careful. In the broader market, a very high yield often signals higher risk. However, with SCHD, we are looking at a sustainable, high-quality yield that represents real corporate profits. Now, let's look at the simple formula to calculate your target. Our goal is $3,000 a month, which equals $36,000 per year. To find your freedom number, you take that annual income goal and divide it by the dividend yield. Let's look at three different scenarios. In scenario A, we assume a conservative 3% yield. In this case, you take $36,000 and divide it by 0.03. The result is $1.2 million. In scenario B, let's say the market dips and the yield rises to 3.5%. Now $36,000 divided by 0.035 equals roughly $1.03 million. Finally, look at scenario C with a 4% yield. $36,000 divided by 0.04 equals $900,000. That is a $300,000 difference in your required nest egg just based on a 1% shift in yield. I know what you are thinking. $1 million? That sounds like a lot. For most people watching this, especially if you are in your 20s or 30s, seeing a seven-figure number can feel discouraging, but here is the reality check. This is a long-term play, not an instant lottery ticket. You have to undergo a mindset shift. You don't start with $1 million, you build it brick by brick. The beauty of dividend investing is that you aren't just saving money, you are buying an income-producing asset that grows on its own. So how do you actually reach that number? Let's break it down by monthly investment amounts. If you are starting from zero and you want to reach that $1 million mark, your timeline depends on your consistency. If you invest $500 a month into SCHD, assuming an average total return of 10%, which includes both price growth and reinvested dividends, it will take you about 30 years to hit that $1 million goal. If you can bump that up to $1,000 a month, you cut that time down to roughly 22 years. If you are a high earner or very frugal and can invest $2,000 a month, you could reach that $3,000 monthly dividend goal in about 15 years. years. The secret sauce here is the compounding effect. When you receive a dividend from SCHD, you shouldn't spend it, at least not yet. You should use those dividends to buy even more shares. This creates a snowball effect. In the beginning, your contributions do all the heavy lifting, but eventually your dividends will buy more shares than your monthly contributions do. This is the moment your money starts working harder than you do. It's the tipping point where the growth becomes exponential rather than linear. However, many investors fail before they get there because they make common mistakes. The first mistake is chasing high yields. You might see a stock or a different ETF offering a 10% or 12% yield and think, I can hit my $3,000 goal much faster with that. Those are often dividend traps. If a company is paying out more than it earns, the dividend will eventually be cut and the stock price will likely crash. SCHD avoids this by only picking quality companies. The second mistake is not reinvesting dividends early on. Every dollar you spend today is worth $10 or $20 in the future. The third mistake is simply expecting fast results. Dividend growth is a slow burn strategy. It requires the patience to watch the paint dry for the first few years. Lastly, many ignore the power of growth. They focus only on the current yield and forget that SCHD's payout increases almost every year. This leads us to the most powerful part of the SCHD retirement calculator, dividend growth. Over the last decade, SCHD has increased its dividend payout by an average of about 10% per year. This is a game changer. It means you might actually need much less than $1 million to reach your goal over time. If you buy shares today at a 3.4% yield, but the company increases its dividend every year, your yield on cost goes up. This means the money you invested 5 years ago might be yielding 5% or 6% today based on your original purchase price. For example, if you aim for $2,000 a month in dividends today, by the time you retire, that same investment could be paying you $3,000 or $4,000 a month simply because the companies inside the fund raised their payouts. Consider an alternative technique to speed things up. Some investors mix SCHD with VU or QQQ growth ETFs. To develop wealth quickly, focus on strong capital growth in your early years, then flip the switch by selling growth assets and shifting the lump sum into SCHD when you're ready for income. This keeps your portfolio flexible and lets you capitalize on tech's enormous increases while planning for passive income. Your personalized plan framework. 4 easy steps. First, choose a monthly investment amount that fits your budget. Step 2, enable DRIP to multiply your wealth automatically. Step 3, maintain consistency over 10 to 20 years regardless of market conditions. In fact, dividends buy more shares at a bargain when the market falls. Step 4, stop reinvesting and deposit $3,000 into your bank account. Start with anything. $100 a month is better than nothing. The day you start investing is more essential than the day you make $1 million. Reframe what we've discussed. Earning $3,000 a month in dividends isn't a daydream for the rich. Quite simple math, discipline, compounding, and choosing assets like SCHD lead to it. This is about freedom, not figures on a screen. The security of knowing your bills are covered whether you work or not. Establishing a legacy and overcoming paycheck dependency are key. I want your response now, your goal. Comment below with your monthly investment and I'll help you determine your schedule to reach $3,000 every month. If you like this analysis, watch our next deep dive on portfolio optimization for faster growth. Start working today. Your future self will appreciate you. Keep investing, stay disciplined, and see you next time.